Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM, linking us investors and traders to the global market to access various financial assets. Today is the 28th day of March, getting into the last weeks of the first quarter of 2024, and we could all agree that the market does not lack volatility. What do I mean by this? We see the market across various asset classes moving, and today we are going to talk a little bit about the movement of gold, and also we take a look at Asian side of the financial assets, and I'm speaking about the yen. I'm sure McLean would like for us to talk much more about that. But before we proceed, I would like it to bring to you that this is going to be a pre-recorded YouTube video, to mean that you could access this YouTube video at your own convenience time by visiting HFM Kenya, going to YouTube and searching HFM Kenya. You will find our landing page there. Like, subscribe, share, and click on the notification button so that you are not left out in future content that we produce from time to time. With that in mind, for those of you who joined yesterday's New York live stream, where myself and my colleague from South Africa jumped onto Instagram, Facebook, generally social media live stream on New York Open, when we called out for a few trades, and out of 2 trades, both hit take profit. In case you missed this, don't worry, be watching out for this in the future through our social media channels, HFM Kenya, HFM South Africa, for you to see these joint programs that we analyze the market together with the millions of HFM family. Now, with that in mind, we proceed to the charts as we speak about fundamental analysis. Technical is speaking technically, that we have defined time without numbers, that technical analysis is the study of geopolitical events and economic data which moves the markets. With that regard, yesterday we had somewhat of a mixed reaction. Let me filter this. Mixed reaction from the United States, or in the labor markets, where we see S&P Global Manufacturing PMI coming out lower than expected, while S&P Global Services PMI coming higher than expected. So we see a somewhat recovering labor market in the United States, but we see it being challenged on the angle of prices of commodities, that is inflation. Towards this, we also spoke about yesterday the Trump targeted tariff on automobiles. This is car manufacturing countries. Trump is targeting them on taxation, and this sent mixed reaction in the stock market, where we see not so much movement happening yesterday in either direction, and gold and commodities in precision to gold enjoying this particular news. And we'll go to the charts to see the interpretation of this in real-time data before we proceed and look at yen. The yen, very nice. This is US oil. US oil has been holding up steady, not printing either to the upside or downside. Remember, this is the daily time frame. Yesterday, closing with a gravestone doji, which is quite an indecision candle. We would be monitoring this as the days unveil. But when you move on to gold, guys, we see something beautiful happen. We see the all-time high being taken out from the area of interest that we spoke about on this same series of the daily morning market call, and we also called it out yesterday on the live stream with my colleague from South Africa, Mr. Maestro, or Mr. Letu. Having this in mind, we say that the forces moving gold at this particular time in history could be and can be attributed to the uncertainties which are caused by the trade wars. Uncertainties are having investors in jilters. Investors are feeling cold, investors are feeling less confident on other asset classes, and they put their money on something valuable. And what is more valuable than gold? My guess is as good as yours. Not at the moment. Nothing is as valuable as gold in regards to the financial markets. This is causing the demand of gold to increase, where we see gold taking its all-time high and creating its all-time high, breaking above, they already said 44.15. This is likely going to be the scenario in the days to come. For if you missed this entry, both during yesterday's money market call and during New York open bell, would wait for retracement to key levels. We'll be updating these as time comes, but I see one here where price attempted to break, touched down, and printed to the upside. These repeatable patterns that we see from way down here will keep it repeating itself. But remember to observe risk management while trading any of the financial assets, so that you have long time in the market to make huge risk to reward benefits in your attempt to make possible profits. When we go to stock, beginning with a broader aspect of the United States, which is S&P 500, yesterday we closed the gap which had opened in earlier in the week, and now price is attempting to keep printing bearish. We out to have optimism in the market after the Trump's targeted tariffs into the opening of the week, but this seems to be challenged. Remember, these uncertainties come because it is one-sided. The administration of Donald Trump, which we have talked about so much this year, and in the beginning of the year we mentioned that we will be seeing a change in the forces moving the market. These changes are studied in fundamental analysis, geopolitical events, or economic forces. We see a shift from monetary policy, which is the control of supply and demand for money by the central banks, into fiscal policy, where we see the man in history or governments and states taking stances which moves the financial markets in a particular fashion. That would be considered quite a risky asset to be looking at right now. The same to US 30 or the Dow Jones. If we look at US 100 or the Nasdaq, also behaving in a similar fashion, breaking the area of interest, now attempting to print on the downside, not giving us much clear direction, because if fundamentally speaking we're having mixed reaction. Some traders, technical traders more so, who pay less regards to fundamental analysis, would consider this as a retracement to keep buying to the downside. But fundamentally speaking, we have no concrete data to give us optimism to ride the trend in a particular direction. German 40 also seems to be struggling. We see stocks both in Europe and Americas giving us the same market print, where price is said to be consolidating. And if you would be getting into this German indices or basket of stock, it would be important to consider getting in for longs as compared to shorts until significant lows are taken out. But at this moment, this would be considered a risk-on approach. Moving on to the Japanese pairs, beginning with GJ. GJ has been printing a somewhat bullish momentum, and if we draw the change in character, just a moment. We see from the daily time frame we were in a bearish structure. Price changed its character by moving from a bearish structure and taking out highs and starting to print higher highs and higher lows. This would be considered a change from short positions to long positions. giving investors and traders who look at Japanese pairs in this context of GBP JPY reasons to look for buy positions. A likely scenario that we're also going to see on Euro JPY, which does not move so different from the asset we have looked at. Price printing on the upside, and we see today it actually opened with a gap. Just a moment. Opened with a gap. Quite bullish momentum if you ask me right there. Majority of the time this gap has to be filled, so we would wait, or scalpers would take advantage to get for short position. At least 48% of the time this gap has to be filled, and we are going to be reviewing it into the coming weeks. But as it stands, JPY seems to be having a recovery phase from the down trends that it has been experiencing in the recent past. A likely scenario also we are going to see on USD JPY. We see the bearish trend that was forming is now challenged, and price is printing to the upside, giving us reasons to consider getting in for long position. But in this pair, we would wait for this high to be taken out, and we shall be reviewing this in the days to come. Somebody is requesting GBP USD. That is my good friend Malika. GBP USD also held on from the area of interest, which is indicating that we should consider continuing the long position that we were already on. And just this morning we have had fundamental analysis printing. Let me just check which one was this. This is retail sales data printing, all positive, high above expectation, which is giving investors and traders confidence to continue being long in this particular asset. We see it hold on this area of interest, and we see a beautiful marriage between fundamental analysis and technical analysis. This is what we like to see, traders. This is what we like to see, team. When we see this in play, it gives us much more confidence to give us a market bias. And with a market bias, we know that an asset is either appreciating in its value or depreciating in its value. For a safer, much more safer trade on this regard, Madam Malika would wait for the highs to be taken out for us to keep getting confidence and finding retracements for us to being long. In short, when you are long on GBP USD at this time, it's considered a much less risky trade or risk of approach. Okay. Okay, so if this is your first time to interact with the financial market, kindly get back to your mentor and ask them to help you register for an account, which is absolutely free. After you do that, you fill in your details by visiting hfm.com, attempt to register for an account, and you'll have our experts, our experienced experts, get in touch with you to help you finish the account registration process for you to get to the investment stage. And as a disclaimer, all we discuss on the daily morning call is not by any chance financial advice, is purely meant for educational purposes. Kindly do your due diligence and remember to observe risk management. Until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. God bless and take care.